the Secretary General of the Ceylon National Chamber of Industries. Today, actually, we must first thank the DFCC Bank for partnering with us for conducting this webinar today on how banks can help the short-term and medium-term cash injection for business and COVID-19 impact on business. Ladies and gentlemen, we know that the COVID-19 pandemic has created different levels of impact across sectors, locally and globally. While there is an immediate effect on the economy, there will be medium and long-term effects arising from the restrictions policies of the virus. To help the country to recover from the prevailing situation, we know that the DFCC Bank was among the top banks in the country to provide financial concessions and assistance to its customers who have been affected by the COVID-19 pandemic in accordance with the relief guidelines communicated by the Central Bank of Sri Lanka. With regard to trade business, the pandemic has affected international trade significantly. We know that all the supply chains have been collapsed, and some of the recent measures announced by the government have direct as well as indirect impact on import and export businesses. Similarly, we focus today on the regulatory and operational aspects of the recently special deposit account. The government of Sri Lanka, in consultation with the Monetary Board of the Central Bank of Sri Lanka, recently introduced a special deposit account with the view of seeking assistance for the national effort to encourage the effects of COVID-19 outbreak in the country. The main objective of this initiative is to attract foreign exchange to the country. The DFCC special deposit account was launched recently by DFCC Bank, offering attractive interest rates and benefits to customers. Today, to discuss these things, we have a panel from the DFCC Bank. First, ladies and gentlemen, let me introduce the resource persons today. Mr. Thimal Pereira. Mr. Thimal Pereira is the Executive Director and the Deputy Chief Executive Officer of the DFCC Bank PLC. He possesses extensive experience in banking at senior positions, having been with the HSBC Group, Sri Lanka and overseas, the Commercial Bank of Qatar, Barclays Bank PLC, UAE, and at Hatton National Bank. He is a Director of Equity Stock Brokers Private Limited, Guardian Equity Asset Management Limited, and Synopsys Limited. He has also served as a board member of the HNB Assurance PLC, HNB General Insurance Limited, and HLB Grameen Finance Limited. Mr. Pereira is a member of the Institute of Chartered Accountants of Sri Lanka and a finalist of the Chartered Institute of Management Accountants, CIMA, UK. Then we have Mr. Shamendra Mercilan. He is currently the Senior Vice President, Head of Corporate Banking at DFCC Bank PLC. Mr. Marcelin counts over 22 years of banking experience with both foreign and local banks, with extensive exposure in retail banking and wealth management. Mr. Marcelin holds a BSc in Economics and Accountancy from City University, London, and a Financial Advisors International qualification from the Chartered Insurance Institute, UK. Then we have Mr. Vajira Punchiheva, who is currently serving in the capacity of Vice President, Regional Manager, DFCC Bank PLC. Mr. Punchiheva possesses 24 years of professional experience in the field of insurance, development, and commercial banking. Mr. Punchiheva holds a BSc in Applied Sciences from the University of Sri Jayawardenepura, MBA from the University of Ruhuna, and a Master's in Financial Economics from the University of Colombo. He is also an associate member of CIMA and the Institute of Bankers of Sri Lanka. So, ladies and gentlemen, this is our panel and the resource person. I would like to start from Mr. Thimal. Through bank loans will assist businesses in staying afloat during these trying conditions and trying times. Yet, it long-term solution.
Morning, everyone.
Yeah,
A
Mr.
warm
Simal.
welcome. Can you hear me? Welcome to
Yeah,
everyone.
yeah, I can hear you,
Uh,
Mr. Simal. Yes.
yes, a warm welcome to everyone. If I may kindly ask everyone who's participating to go on mute, please, and only unmute yourself if you have to ask a question because it is picking up some background noise. So please, if you can do that. Firstly, let me also start by thanking the CNCI for facilitating this webinar. We as DFCC Bank are very pleased to be a part of it, Mr. Muthugala. I'll get to your question in just a minute. Um, I hope everybody can hear me. Right. So your question, I'll repeat it for the benefit of everyone in case they missed it because there was some background noise at that time. I think what you asked me was whether the injections of cash into business through bank loans will assist businesses staying afloat during these times, or whether there's anything else that they also should be looking at doing. That is the question, right, Mr. Muthugala, just to clarify. Okay, so in that light, actually, now DFCC, like Mr. Muthugala mentioned, has been one of the pioneering banks in assisting our clients in during these difficult pandemic times. We were, I think, one of the very first banks to grant the moratoriums as specified by the Central Bank of Sri Lanka, and also in granting the Saubhagya working capital loans to our customers who needed that finance to basically see them through the difficult April and May months of the pandemic. So during the last couple of months and into June as well, the bank has granted, I would say, thousands of working capital finance loans as well as moratoriums. But to, as Mr. Muthugala asked, is this actually a long-term solution for businesses? The short answer is it is not. Now, what we've done through the working capital finance is we've made sure that businesses that were shut down due to the lockdown situation in the country had enough funds to meet their very critical supplier payments and also to meet their urgent salary payments plus utility bills and so on and so forth. So that basically would help businesses to see through that time when the businesses were shut down. Now, since, of course, the beginning of June, as you can see, the country is getting pretty much back to normal. Most businesses are open now. There is regular footfall. What we are currently doing is also looking at businesses that obviously, well, their cash flows were affected and are finding it difficult to, say, meet their trade loan payments and other loan commitments. We are looking at moratoriums ranging between 3 to, say, 9 and 12 months. Now, that again, the period of the moratorium depends on how badly the business is impacted and the expected recovery for that business. So certain businesses like, say, the tourism or travel industry, we see as long-term recovery sectors, we would be more open to looking at longer-term moratoriums, while certain other sectors like, say, the health sector, or even, say, the education sector, or even the tea industry, we see as, say, mildly affected industries, and therefore the moratorium period probably would be for a period of, say, 3 months, as opposed to the longer 9 to 12 months for the longer term impacted industries. Now, as you quite rightly said, Mr. Muthugala, this is actually a short term solution. Now, businesses would also have to kind of reinvent themselves, rethink how they are going to continue the business and how they are going to run their businesses under the new normal situation, right? Because the pandemic, as everyone understands, is something that we didn't foresee coming. It has really changed the landscape for many businesses. We would have to, businesses who actually would survive this and would bounce back are the businesses who would really be thinking on their feet and thinking of how they could remodel their businesses and their business strategies to suit the new requirements that have come out of this pandemic situation. For example, we are already seeing a lot of supermarket businesses and so on and so forth who are getting into online ordering and online delivery, right? Doorstep deliveries and online ordering. We are seeing restaurants who are doing it in a much larger scale. We would also have to look at, say, if you look at the hotel sector, there would be a need to rethink their target markets because obviously the international travel is going to be restricted for a longer period of time. So how are they going to manage to run their businesses in the interim period? Are they going to cater to the local markets? How is the pricing going to be? So people would have to really think on their street and re-strategize their businesses and make sure that they put in place strategies and procedures to ensure that they see through this the next 3 to 6 months time while the world comes out of this global pandemic, and in order to survive in the long term. So the bank finance and the moratoriums are really limited to short-term assistance to businesses to see through the difficult pandemic period and the immediate aftermath of that pandemic. But then businesses need to rethink and re-strategize in order to survive in the long term. So sorry, a little bit of a long-winded reply, but I thought that was required because banks can do only a certain part of it. Then it's also up to the businesses to really rethink their businesses in how they are going to survive in the medium to longer term. Thank you, Mr. Muthugala. I think you're on mute, Mr. Muthugala.
Thank you very much, Mr. Timal, actually, for your clear explanation to the question that I raised. And if I turn towards Mr. Wajira, Mr. Wajira, now can a one-off injection make a significant difference to entities that are still faced with the difficult times ahead? Mr. Wajira?
Yeah, Mr. Muthugala, yes. Let me take it in two parts. Now, if we look at the situation which prevailed before this virus outbreak, some businesses have been doing well and some businesses have not been doing well. Now, if you take those two categories, businesses who have smooth sailing would find it very easy to survive even during this pandemic. Now, as a result, one-off injection, whether it is coming from this Saubhagya working capital loan, what has been arranged through the central bank by the government or through other banks, might be helpful those businesses to survive in these 2 months and to get ready with the new era, which is called new normal era. But if you look at the second category, which is where the businesses have been struggling all throughout, even before this virus outbreak, they may have different or multiple issues with their businesses. It may not be really with the working capital. It might be technical issues. It might be debt collection issues. It might be HR issues. Likewise, there may be multiple issues faced by those businesses. Therefore, those businesses might not be beneficial, they might not find this one-off injection be helpful in that sense. Therefore, we have to understand, or rather those businesses will have to understand what the real issue in their business model is in the aftermath of this virus. Therefore, we have to find solution according to the issues faced by those businesses. Businesses who had smooth sailing will go through this pandemic situation, though with difficulties, but they will survive. Other businesses which have faced difficulties should understand their business and find solutions accordingly. Now, to answer you directly, whether this one-off injection will help businesses, that may not be. But then it is the responsibility of the business owners and the staff in those businesses to understand their business model correctly and introduce reforms and introduce technology wherever it is applicable and possible, and reduce their cost. And to fight these short-term period to survive in the long run. Therefore, we have provided them some moratorium benefits. They don't need to pay their loans and other trade facilities, so that they can save some money in addition to those one-off working capital injection and invest them in their businesses. And if they have some facilities which are basically with large exposures, and they can go to banks and ask for restructuring, extended tenors, for some restructured repayment terms. Likewise, they have to understand the issue in their businesses and find solution with the help of the banks. That is the only way out of this pandemic and the virus outbreak. That's what I think, Ms. Muthugala.
Thank you very much, Mr. Wajira. Mr. Shamindra, now actually this COVID-19 outbreak has sometimes created fear among the employees of the organizations. And it is the duty of the government as well as the other responsible authorities to protect the job security of the employees. So is the primary purpose of cash injections to stop unemployment for spiraling? So, if so, isn't that encouragement to businesses to keep carrying unnecessary staff on their payroll rather than focusing on increasing efficiency?
Thank you, Mr. Pillai.
Yeah.
A very good morning to everyone on the webinar, and thank you for giving us the opportunity. Like my DCO said, it's a privilege to be on this webinar. Just to answer that question, I think one of the objectives of a cash injection is to preserve livelihoods, but that's not the sole objective or the sole purpose behind this. For example, due to the ongoing situation, a manufacturer or an exporter may be compelled to provide extended credit periods to their customers, while at the same time, his suppliers, his raw material providers, his subcontractors may require payment or may not be in a position to basically extend credit. As a result, for example, even import bills have to be settled on time. So the cash injection, these entities can ensure that suppliers and contractors are paid on time whilst extending credit to their vital customers. So this will ensure that the supply chain continues to function. Yes, it is, but I would say that I think the whole purpose of the injection or this cash injection that everyone is referring to is to enable the wheels of commerce to continue to turn and there to be liquidity in the market. For example, another important matter that we need to look into is the payment of rates, utility bills, because these are critical payments that need to be physically met, and industries would need this support. So as a result, they wouldn't want to face problems of litigation or issues arising because statutory payments have not been paid on time, etc. So this injection, as I mentioned at the start, is focusing on ensuring the livelihoods are also not disturbed, and that the business continuity continues.
Okay. Thank you very much, Mr. Shamindra. How can banks ensure that injecting cash into businesses actually being used for the best purpose rather than simply being used to keep unprofitable businesses from facing bankruptcy? I mean, how do you ensure that the cash into business is actually being used for the best purpose?
Now, it's like this, Mr. Muthugala. Now, there has been two types of support given to businesses. One is from the government side, that is Saubhagya Working Capital Loan, which is basically given to support the livelihood, to pay salaries and very important compulsory utility payments. So those two payments are the critical payments for a business to survive. Therefore, government has supported those businesses by providing working capital to pay salaries of their employees and to pay utility payments, compulsory utility payments. So by giving those loans, and before we grant those loans, we examine their salary bills, total salary bills, and their utility payments. Banks had a thorough check on those things before the loan was granted. As a result, we know that we are giving the correct amount to businesses to pay their salaries and to pay their utility bills. In that sense, we can guarantee that those funds have been used correctly to pay those things. Of course, if one still wants to misuse it, there is an opportunity. We don't deny that. On the other hand, if the funds are coming from bank side, of course, then it will be evaluated on a business plan. The particular business has to give a detailed business plan indicating how they are going to survive in this short-term period and what their long-term plan is to come out of this pandemic situation and in the aftermath of the virus outbreak. So we examine, then we evaluate those business proposals thoroughly, and we understand what the risk is involved and whether that risk is acceptable to the bank. Likewise, we make sure that funds requested by those organizations or those businesses are really required to revive the business and survive in this period. Therefore, we put conditions to make sure that funds are correctly used for the intended business purpose and for the survival of the business. Likewise, banks can make sure, Mr. Muthugala, that funds are not misused by the businesses and they are used for the intended purpose, and that will make sure those businesses survive and revive into the next level of after the COVID outbreak. Thank you.
Okay, thank you, Mr. Wajira. We know that actually now during this period, many of the companies, many of the business organizations faced immediate issues due to their impossibility of cash collections and the payment of salaries, payment of utility bills, as you said. Actually, these are immediate issues. So in addition to these cash injections to businesses, can banks implement other long-term continuous strategies to help those businesses that are facing issues right now?
Yes, that part is also taken care of. In fact, we have divided this issue into two parts. Now, if you carefully look at this, Mr. Muthugala, now this new coronavirus outbreak is a very unique situation. Now, none of the businesses in the world has faced this kind of situation in the past. We have had our fair share of disasters in the past, like say tsunami, maybe floods, even the Easter bombing. All those disasters happened, and then from the next day onwards, what we were supposed to do was to pick up pieces and go forward. But this situation is different. Now here, we have to live with this virus and at the same time find solutions to our problems. That is a unique situation, and everybody has to understand the situation and adjust their businesses, adjust their business models accordingly. So as a result, we have introduced a consultancy team. There's a consultancy team in our head office headed by Mr. Rohantha Senaviratna. I can even give his mobile number. Any business in need of some advisors and some help to remodule or revisit their business modules, of course, can talk to Rohantha. His number is 0777 761 557. I will repeat, 0777 761 557. His name is Mr. Rohantha Senaviratna. Of course, you can call our general number, which is 0112 442 442, and ask for him. He is available, and he can help these businesses which are in need of some consultancy advisors, etc., etc. That is one part. The second part is, in addition to these moratorium benefits, moratorium restructuring, bank itself, DFCC Bank itself, has provided certain restructuring proposals to businesses which are struggling. Now, we know that their cash flow is not strong. It might take some time for them to recover from this virus outbreak. Therefore, we are ready to give them restructured, longer tenors of repayment, so that those commitments, loan commitments, exposure commitments can be matched with their long-term to medium-term cash flows, and so that we can help them to rebuild their businesses while charging a lower rental of their exposures. Likewise, we have a plan, but only thing is businesses also will have to critically look at their business model, introduce certain reforms, and introduce technology, which is now which is something very important in these days, which nobody can deny or nobody can avoid, and come up with some innovative and new strategies to go forward. So if these two things can put together, of course, then businesses can survive. So from the bank's point of view, we are ready with capital injections and consultancy advisors plus restructuring proposals. Thank you.
Thank you, Mr. Wajir. Actually, this consultancy and the guidance, especially to the SME sector, is very vital and very important. I think I must thank the DFCC Bank for implementing such types of consultancy services and the guidance for the SME sector. And Mr. Shamindra, what type of facilities will the bank provide to assist trade clients who are in long-term and medium-term stress managed segments with expected recovery over 6 to 9 months?
Yeah, so that would depend very much on the business itself and the type of stress situation that they are going through. We have been, over the past 2 months, actively engaged in supporting our clients through working capital loans and short-term loans. We also have supported numerous clients through various central bank, directives that have been issued in aid of the support rendered to businesses who have been impacted by this COVID-19 pandemic. My team is ready to support our customers who need, and like Vajira mentioned, we have the consultancy services, we have dedicated relationship managers to take on board the various requirements, and then fullest cooperation towards the clients who need this type of assistance. So again, I think my DCO mentioned at the very start, we will have to assess the client, their stress situation, the recovery that they would take in order for us to support them in the various initiatives. So we have been doing this over the last 2 months, and we will continue to do this where our customers would basically seek assistance.
Thank you. Thank you, Mr. Shamindra. Mr. Shamindra, now actually these are the packages of the banking sector, and what I would like to ask, are there any new initiatives to promote trade business in minimal and short-term stress segments?
Yes, we do have. We have, for example, we are actively engaged. As I mentioned to you, the last 2 months since this pandemic came upon us in March, April, May, we continue to work through the lockdown period and support some of our clients. We would, basically look at our clients' needs and then suggest bespoke solutions in terms of the requirements that they need in order to resuscitate the business. We would look at, the type of import loan that is appropriate. LCs to bank guarantees. We have a state-of-the-art, and I think again my DCO mentioned at the start of how companies need to basically recalibrate and restructure businesses to face the new norm. We have, and I think it was proven during that period of shutdown, convenience is key. We have a state-of-the-art payment and cash management proposition. So these are some of the initiatives that we would expect the customers to now take forward, because that is going to bring in a lot of convenience. And digitalization is now the key word. We have been the bank that has been in the forefront of that. We would advise our customers to take on board because it brings a lot of convenience to their day-to-day operations. Even for example, when we take our payments and cash management process, a lot of these clients of ours are people who are traveling. Obviously, under these circumstances, travel is restrictions factor. For example, our mobile application where you can be convenient to customers to basically take on board, implement at their end. As I said, we have a trade team again who would work very closely with our customers and see to their requirements, and then through our corporate banking team, all get together to basically find a solution.
Thank you, Mr. Shamindra. Mr. Thimal, at the instruction part, we talked about the special development account being improved by the government on the instructions of the Central Bank of Sri Lanka. Is the special deposit account, the SDA account, only for Sri Lankan citizens or residents in the country, or is it possible for the other people also to open these accounts?
Thank you for the question, Mr. Muthugala. Actually, the special deposit account or the SDA account, as it's commonly known, the eligibility for it is very, very wide. In fact, almost anyone can open an account. Citizens of Sri Lanka, Sri Lankans working overseas who are expatriates, non-nationals, companies incorporated in Sri Lanka, companies incorporated overseas. They also have a special category called well-wishers. So basically, the account is can be opened by almost anyone. In fact, really, I'm struggling to find anybody who's not eligible to open an account. But there are some special guidelines in opening this account. So the account can be opened just for the benefit of the participants. I would like to explain a little bit about the SDA account or the special deposit account. It's an account scheme that has been introduced by the Central Bank of Sri Lanka in order to encourage foreign inflows of foreign inflow of funds to the country. The account can be, as it stands now, open between 8th of April 2020 until the 7th of October 2020. Within that 6 months period, accounts can be opened in 2 tenures, either 6 months or 12 months. And the special feature of this account is that the higher interest rate that is paid over and above the normal interest rates paid on such accounts by banks. So on a 6-month account, there is a 1% interest rate over and above the normal rate of the bank. And on a 12-month deposit, there is a 2% interest, additional interest that is paid over and above the interest rate of the bank. It can open in very many different currencies, euros, dollars, sterling, and so on and so forth, Australian dollars. The account, the only thing relevant for this audience is that the account has to be opened during the 6 months period, and the funds have to be routed to it has to be new funds. So if you, for example, have funds in a foreign currency account in a bank in Sri Lanka on or before 8th of April, you can't transfer those funds to the SDA account and benefit from the additional interest rate. So it needs to be new funds remitted through the banking system into the country after the 8th of April and before the 7th of October. And these funds have to be routed either through an inward investment account, which is called an IIA account, or a FCBU account, a foreign currency banking unit account, or directly into the special deposit account that you need to open specially for this purpose. So at the end of this, if there are any questions on this, I'm happy to take, but that is the general outline of this SDA account. Thank you, Mr. Muthugala.
Yeah, thank you, Mr. Thimal. Thank you very much. Mr. Wajira, now we know that actually to open up an account, now someone should physically go to the bank and do the openings. And now how can customers living overseas open SDA account without being physically present in Sri Lanka? Is there any possibility to
Yes.
open an account here? Yes.
The process is Yes, they can. They can. Now, there's a simple to do is they can download our application from the website. Account opening application is available on our website. They can download it and complete it. And there are certain documents required to be submitted together with the application, like copies of the passport and KYC documents, etc., etc. Those documents, the KYC document is also available in our website that can be downloaded, and they can complete those documentation and the application, and they have to go to the nearest Sri Lankan embassy in those countries and get their signature attested by an officer in the embassy. So I'll repeat that. After completing the documentation, they will have to go to our embassy in that country and get their signature attested by one of the officers in the embassy, and then send that application to us. What they can do initially is to send soft copies by an email to the bank and courier or mail the documentation later on. Based on the soft copies, we will accept the funds and open the account, but only upon receipt of the original documents, we will complete the account opening process and issue the certificate. That is the simple process. And if there is any inquiry, if there is any clarification necessary, of course, they can always call our hotline and get the necessary advices and details what are required. And the simple process is that any person living outside of Sri Lanka can open this SDA account without coming to Sri Lanka or without being present in the island.
Thank you, Mr. Wajira. I think, Mr. Wajira, particularly these SDA accounts will be very important for exporters, I think. In that case, actually, can exporters open SDA accounts and invest their foreign currency earnings in this particular SDA account?
It is not possible because what exporters receive as remittances are basically not coming through that inward investment account, IIA. They use separate accounts to receive their remittances, and those remittances are received due to a sale of some goods or services. And that's a transaction, and those are not investment funds which are coming to Sri Lanka. Only funds which are coming to Sri Lanka through an IIA account, FCBU account, or PFCA account, that is personal foreign currency account, are only eligible to open these SDA accounts. Exporter remittances are not allowed under the central bank guidelines.
Okay, thank you very much. Mr. Shamindra, if I turn towards you, how can customers continue to maintain their foreign currency deposits with DFCC Bank after the SDA deposit matures in 6 months or say after 1 year?
Mr. Muthugala, we continue to offer, all types of foreign currency. When I say all types of foreign currency, those are commonly, such as US dollars, Aussie dollar, the sterling pound, euro. So once the scheme is over, the client has the option of repatriating this money back to where it came from. That is permitted under the circular and the directives of the central bank. Or if they wish to continue, obviously interest rates would depend on the prevailing circumstances at that time. DFCC has been a leading, or rather we've been leading the way in terms of giving very attractive interest rates on our foreign currency savings and deposits. So the client has the option to then transfer this to a normal bank account, which a DFCC would offer depending on the currency. And these are convertible currency. So in other words, if they wish to take advantage of various currency movements at maturity, they can do so by converting it into Aussie dollars or GBP or even into rupees, and continuing to bank with DFCC if they wish to at the end of the tenure of the special deposit account. I just like to add a few points to my DCO's and Vajira's points on the SDA reference. Now, I think there was a question about asking how someone can open accounts from overseas. So Vajira explained it very clearly that they can download the account mandate and proceed to fill with the various KYC that is required. We also need to highlight that we are having a extremely, I would say, well-known corresponding banking network. So the likes of HSBC, Standard Chartered, Deutsche Bank, Maastricht Bank are our correspondent banks. So it's actually quite convenient because when someone is overseas, they will worry about how fast the monies can come in, how easy in terms of the transfers. And these are banks that have an extensive network globally. So we have a very good network of banks. Then the question in terms of correspondent banking. So there is nothing to worry in terms of getting the monies transferred to DFCC from overseas. The next question was about exporters not being eligible for this. I think we need to look back in 2005-06 during wartime. Sri Lanka basically faced a situation where the reserves were under pressure, and the government then introduced to the Central Bank of Sri Lanka what was known as SFIDA, Special Foreign Deposit Investment Accounts. This again was basically to ask the Sri Lankan expatriate community or even the non-national Sri Lankans living in and overseas to invest in this product. And it did have a fair take up, and it was quite successful at that time. So this is very similar. I think some of the exporters that we have on board today have very good links to their, their customers overseas, and at a time when those countries are basically paying negative rates, I would also call upon these exporters to be ambassadors in actually marketing this, because this is a clarion call by the central bank to basically bring in inflows to the country. We have an extensive network through this whole organization. Passing on this message and putting it across there to your clients, may succeed, and I think would be very welcome. We as a bank and my team, as I mentioned to you before, I have a dedicated relationship manager to handle corporate special deposit account investments, and we are on call. I will share those details with you, and you could socialize that to the wider team or rather the organizational members. We are here to facilitate that process and to make it very convenient. So let us know if there are any interested parties who will be keen to take this account forward.
Thank you, Mr. Shamindra. Mr. Shamindra, then how can the exporters place the SDA deposits?
I think Vajira answered that. Because the exporters, in terms of the proceeds that they are going to earn, my understanding is that they are unable to basically invest. But we have directors of these companies, we have extended family members of these companies living overseas, and they are contacts, so they can easily reach out to us, reach out to me, reach out to me. Okay, and we will certainly facilitate in opening these accounts as quickly as possible, and sharing the account details, and also basically providing the various correspondent banking details in order to facilitate a smooth transfer of funds. So I can share my telephone number immediately, or I can send that across to you all, and please circulate that amongst all the members, which basically then can be used, and I could be in contact with anyone. My phone line is open all day and all night, so absolutely no problem in assisting the companies or individuals of these companies to open these accounts and facilitate these transfers.
So, Mr. Muthugala,
Mr.
Muthugala, let me add something to what Shamindra explained.
Okay.
Now, coming back to this exporters thing, exporter remittances.
Yeah, that is very important. Okay.
Yes, what is in the circular is that funds have to come either through IIA account, FCBU account of PFC. Now, if the exporters can remit their money through FCBU account or direct to the SDA account, then such funds can be invested. But if the funds are coming to other accounts as remittances, they have to specifically get their remittances through FCBU account to direct to SDA account. Then only it will be eligible for investment in SDA. That is the only option what is available for exporters. Thank you.
Okay, thank you very much. Ladies and gentlemen, now we have discussed many things related to the topic that we initially presented to you. And this is actually not what we have discussed earlier, but I should ask from Mr. Timal. We know that DFCC Bank was initially a development bank. Now it is more of a commercial bank. So, Mr. Timal, I would like to raise this question to you. How successfully has DFCC Bank transferred from a development bank to a commercial bank?
Thank you, Mr. Muthugala. Thank you for the question. I would say we are not more of a commercial bank. We are a fully fledged commercial bank. And you're right. Traditionally, we have a very rich heritage of over 60 years of development banking in Sri Lanka. I think we were the pioneering development bank. And if you look at the whole development of Sri Lanka, I think we've had a hand in most of those infrastructure development projects of the country. So we are very proud of that heritage. And like you also quite rightly said, we are now a fully fledged commercial bank. We were in commercial banking, in fact, since 2003 through our fully fledged, fully owned subsidiary, Vardhana Bank. And then what happened in 2015 was that DFCC Bank and Vardhana Bank came together, and we were rebranded as just DFCC Bank. And since then, we are a single entity providing the entire gamut of commercial banking services. We are one of the mainstream commercial banks in Sri Lanka. And if you look at most of our products and services, we pioneered so many new product initiatives and introduced new innovations to the country. Primary product that I would like to mention here is the DFCC Virtual Wallet. We were the first bank that introduced a proper cash wallet to our customers and the industry as a whole. And since then also I mean, talking about commercial banking, we have over almost 140 branches now. We have a very strong digital footprint through our online banking. We have with us almost about 160 ATMs and cash deposit machines spread across the country. And in fact, as we speak, we are committed to make a huge investment to upgrade our entire banking infrastructure. And as part of that, we are bringing in a lot more digital capability to our customers. Anything we do with the customer at heart, and whatever that makes the customer's life and doing business with us more convenient. So the entire investment that we are making in upgrading our infrastructure is aimed towards enhancing and upgrading our digital capabilities. The other thing that would be relevant to this particular audience is our payments and cash management solution, which we have named DFCC iConnect, which basically helps any business manage their cash and finances better, whether it's supplier payments, distributor financing, their day-to-day cash management, and so on and so forth. Perhaps Shamindra would like to add something further in that respect. And to be quite honest, we've I think made that switch from development banking to commercial banking quite well. I mean, nobody now recognizes us as a development bank. We are the primary bank for a lot of our customer segments, whether be it an individual, a salaried individual, SMEs, large corporates, micro segment. We cater to all customers and customer segments, and we have products that suit each and every requirement and necessity of those different customer segments. So we are very proud to be what we are today, from where our rich heritage of development banking and having made the transition to a fully fledged commercial bank. And being one of the pioneer banks across the country. If you look at, I think our key differentiator, everybody can talk about banking, everybody can come up with innovative products, but our key differentiator, and I think our customers are testament to that, is our customer centricity, or the customer service that we provide. We do everything with the customer at heart. Everything that we do is to make the customer's life easier, or doing business with us easier. So if you even look at what we spoke about earlier, the assistance that we granted to our customers during this pandemic situation. We were one of the first banks to abide by the central bank guidelines, and we've done thousands and thousands of new financing facilities for our customers who are facing difficulties, and also done thousands of moratoriums for customers who have been facing difficulties in making their loan repayments. These are individual customers as well as business clients. So I'm sure there are lots of our customers online as well, but they would I'm sure bear testament to what I just mentioned. Thank you.
Mr. Timal, thank you very much. Actually, there is a weave from the participants today. One said that the shift of DFCC Bank from development to commercial has not helped the customers, and also the absence of a development bank in Sri Lanka is an impediment to the industries in Sri Lanka.
Yeah, interesting comment. If I may take the second one first, I think there was a need for development banks, and NDB and DFCC filled that void at the time we were development banks. And if you listen to a gentleman by the name of Howard Nichols, he's been a big advocate of the need for a development bank. I have a slightly different view. There was a time when the development banking or project financing and infrastructure financing was the domain of the development banks. But since then, the banking industry has evolved. If you look at all the large commercial banks, the two state banks, all of them have infrastructure or project financing or development banking arms within their normal banking verticals. So I personally don't see the need for a separate development bank, because everybody is currently fulfilling that need for a development bank of the country. I mean, if there was such a big need for a development bank, I'm sure the government or the past governments would have taken that as an initiative and established one. But I don't think anybody really sees the need for one, because all commercial banks are now, as part and parcel of their day-to-day business as usual, takes on project financing and development financing as part and parcel of their day-to-day banking. So, and the first part of that question was that the transition of the DFCC bank to a commercial bank hasn't helped customers. I would beg to differ, but if this particular gentleman or lady who raised this concern can contact any one of us separately, and if there is a specific grievance or something that you're not happy about, if you can raise it with us, we'll be happy to take that on. Thank you. I think you're on mute.
Mr. Timal, thank you very much. And in addition to that, what I would like to ask from you is that the world is moving very fast with the science and technology, and there are so many changes that has occurred in the business world with the science and technology. And I would like to ask from you, what are the key initiatives implemented by the DFCC Bank to keep on par with the speedy technological changes that are taking place in the world?
Yes. So I think I covered this in my previous response as well. Like I said, we are a bank that is customer centric, and all our initiatives and products that we put out to the market is from the point of view of how is this going to help our customer How is it going to be more convenient for our customer to deal with us, or how is it going to help that customer's business prosper and develop and be successful? So starting with what I mentioned, our DFCC Virtual Wallet, which was the first real wallet application in the market. As I said, all our recent investments and our ongoing investments have been in that digital space. So the DFCC iConnect, which is our payments and cash management solution, the DFCC online banking, the DFCC developments into ATMs and cash recycler machines are all part of that digital journey of ours. So as I think Shavindra mentioned, digitalization for banking is the way forward. What we aim to do is to allow our customers, be it an individual or a business, to deal with us at their convenience and through devices and applications of their choice. So whatever, if they want to deal with us through their mobile phones or through their computers or through their iPads, what we plan to do and what we aim to do is to be able to respond to that customer need and meet the requirement that is being raised by that customer. So, and like I said, we made tremendous investments into that space, and I can only say watch this space, because this is just the beginning. There will be a lot more innovations that we will be bringing to the market, and these are not just for the sake of being innovative or just because the bank down the street has come up with a similar product. It is really with the sole aim of making the life and business of our customers more convenient and more pleasurable to deal with DFCC Bank. Thank you.
Thank you, Mr. Timal. Thank you very much, ladies and gentlemen. I have asked so many questions, and I am sure that the participants may also have so many issues to be clarified and some questions to be raised. And
Mr. Mutugala,
I would like to give.
Mr. Mutugala, can I just add to a point of my DCO in terms of the digitalization and customer convenience?
Okay.
I think when this question is asked by you about what can customers do differently, I think if you take our PCM platform and if you question yourselves as an organization, today we are still, or rather we still find companies wanting physical bank statements, wanting to basically give physical fund transfer instructions. Now these are simple things which will bring efficiency into the organization if they basically have a payment platform like iConnect, where they can view their statements from anywhere around the world, from their mobile phone, from their residence. In a lockdown situation, they don't have to worry about, what is happening to their account or what fund transfers they need to do, because the banks will continue to work. As shown, we are essential services, and even if there is a future lockdown, let's hope we don't get to that, we will continue to work. But then the customers find it extremely difficult to get across fund transfer instructions, or they call for statements, which they have, but habitually it is about coming into the bank and taking an extra printout and writing. But these are things that I think the customers can think differently, because there is a new norm setting in, and these are convenient, very efficient. It cuts down, time you waste in sending your resources to a bank. They are stuck in traffic. They can authorize payments from the phone, and there is doubt as to whether what they're authorizing is genuine. But again, in those instances, we have a platform which basically gives you all the source documents. So you can be traveling overseas, you can be away from your office, and if you get an authorization top-up message on your phone, you can actually first view all of the source documents and then satisfy yourself that this is in order. So these are the little things that if the companies start to basically roll out internally, right, they are going to get more efficient. We have a lot of IT companies that are banking in DFCs, and if you only know the type of innovation that the companies overseas are now looking into, I think Sri Lankan companies have to gravitate to that. If they want to remain competitive, if they want to compete with the global, in the global space and survive, not only this COVID-19, but whatever the headwinds we are going to basically face, then they need to look inward and invest in technology that will make things very much easier for them. So we are ready to be a part of that equation and facilitate whatever we can.
Thank you very much, Mr. Samindra. As I said, ladies and gentlemen, I think the participants may also have so many issues to be clarified and some questions to be raised. So I can give you some few minutes for the participants to raise any questions that you have with regard to the topic today. It's over to you, my dear participant.
I wish to make some clarification. Under the current pandemic situation, most of the exporters have lost their orders. In the sense, the buyers, overseas buyers, have cancelled the orders. And for other exporters, they have asked to stop the processing of orders. So how best the FCC has helped these exporters? That's my question.
Rajesh, do you want to take that, or Shamindra?
I can take it and then maybe you all can chip in. I think that's a very valid question that's been raised. We have had exporters who have come to us and said that some of their principals have, right, like you said, have cut down orders or even sometimes cancelled. But all of these exporters are companies which are still optimistic that there is going to be a take-up somewhere down the line. For some, it might be 3 months, some it might be 6 months, and some it might be 9 months. So it's all about how you support them through this, phase. There are those who feel that, for example, if you take garments, our understanding now, and with those who have basically who banked us, is that they are what they factored in March, April is not as bad as what they now see how things are turning out, because they find that some of their principals have now started to give limited orders versus a zero order outlook somewhere around March, April. So it all depends on the company, and we also would support companies who are looking at post-COVID. They need to also rework their numbers, rework their business plans and strategies in order to accommodate all this, or rather to factor in the shock of this whole pandemic, and then sit with us to decide what type of turnaround times is required. Some of these companies might even take 12 months to 18 months to recover, especially those in the tourism sector. And we are willing to support them throughout that process, as long as the business case and they are taking the right decisions. And if those decisions are evident, then we would definitely support them in this endeavor.
Sorry, I just want to add something very quickly, if you don't mind. So in addition to what Shamindra mentioned, the thousands of moratoriums and loan deferments that I was talking about was to help customers such as yourself. I'm not sure of the gentleman who raised the question, but from the bank's point of view, that is all we've been doing in the last 2.5 months, looking at customers who are facing these difficulties and helping them by way of deferments of a reasonable time frame. But what is also important is, like I mentioned earlier, banks will certainly go the distance to help customers. That goes without saying. There's no doubt that we'll do that. But as in terms of customers also, that's where I mentioned earlier also that you will need to also relook at some of your business models. You may have to go after new customer segments. If your current buyers are in countries that are badly affected by the pandemic, you may have to shift to new markets. You may have to re-engineer products to suit the requirements of those new customers. So everybody needs to, if you really try to go back to where you were pre-pandemic and think that is going to be the way forward, that is a sure recipe for problems going forward. So everybody needs to reinvent themselves, rethink their strategies, and see what they need to do in order to come out of this situation as soon as possible. So sure enough, there may be certain buyers who are cancelling orders, who are reducing quantities, but there may be a certain shift in other markets. Now we have a customer who kind of exports bicycles and things like that. While some of his markets are seeing a big downturn, there are other markets in Europe that his orders have doubled. Where more people are getting on bikes, getting outdoors, getting exercising. So that is the kind of innovative thinking that customers would also have to do in order to, for all of us to face this unique situation and come out fighting and better than we were before. Thank you.
Thank you.
Thank you very much, Mr. Timal. And there is another question raised by one of the participants. It says that there is a resurgence of economic activities after the opening up of movements. What is the thinking of the banking community of the sustenance of this resurgence in the long term? Mr. Wajir, I think you can answer this question.
Yes, Mr. Putukala. Now, of course, after opening the country slowly but steadily, now we are experiencing increasing number of inquiries coming to us. Now, people are asking whether they can take loans, whether they can expand, whether they can do certain modifications or introduce certain technologies into the business. We are getting certain inquiries about such requirements. Now, the important thing here is that even though the country is open for business, now certain businesses, as DCO correctly mentioned, some of the businesses might need certain modification to go forward, because we are not in the pre-pandemic situation now. It is different now. Market is different, consumer behavior is different, and banks' approach, banks' risk appetite, all are different. Therefore, businesses also need to understand this very carefully and change their business models as well. Now, if a business needs some money to do certain modifications, expansions, introduction of technology, or etc., then they need to have a very clear understanding on their business plan for the next 6 months, 1 year, or 2 years. And in those business plans, they need to address what the kind of risk they are willing to take, what are the new things they are going to do, how they are going to address these different consumer behavior and different buyer behavior, etc., and what is the cost of introduction of technology, digitalization, and what kind of benefits, cost benefit will bring to the business in introducing such technologies. Those things are the important ones in deciding whether to give a loan or not. And certain sectors, certain industries, we have identified that some fall into minimal stress or short-term stress level, and some businesses fall into medium-term stress level, and some businesses, some sectors like tourism, construction might go into long-term stress level. Likewise, there are different stress levels, risk levels applicable for different types of sectors, industries, and businesses. So, as business people, you all need to understand what the level of risk particular business is faced today and strategize accordingly. And banks are always willing, we are always willing to help businesses in this aftermath of COVID-19, and when the country is open for businesses, we are ready to help, but only with a very solid and realistic business plan. And this is not only applicable to SME sector, we are catering to MSME sector, that is micro level businesses which are operated in Sri Lanka, small business models, say which come under micro level businesses which might need 50,000 loans, 100,000 loans, 200,000 loans. We are catering to that sector as well, and we are very much familiar with their requirements and their risk level as well. Sometimes those micro level businesses are more resilient to this virus pandemic, because they can adjust they are very agile and they can adjust their business model very fast. So they are more tend to survive and revive their businesses in this pandemic situation. Likewise, all the sectors are covered by the bank. We are ready to support all the sectors, any business type, any business sector, any business model. But important thing is those businesses need to understand this reality and adjust their businesses, revisit their business models, and come up with realistic business plan and business strategy. Thank you.
Thank you, Mr. Wajira. Yeah, dear participants, you can raise if you have any more questions.
Well, I have one more question, if you don't mind. Could you please tell me what is DFCC's future plan post-COVID to help the SMEs as well as SME exporters?
I think Mr. Timal, you can ask that question.
Yes, I actually have a very simple answer. Like I said, we have, I would say our plans are the same as pre-COVID, because we are a customer-centric bank, and all we do day in and day out is working with our customers and helping our customers. So that doesn't change. Like Vajra said, we will support the revised or amended business plans of our customers. We do understand that some businesses may take longer to revive than others, depending on the sector and the target customer markets that they're exposed to, and we will work with them. Our ultimate objective is to win together. So we would do anything and everything that is required to help our customers see through this. But like also Vajra said, there needs to be well thought out and solid business plans that are laid out, and then we can obviously partner those businesses in helping them with their financial requirements and meeting those financial requirements. So in short, I would say, I mean, we've always been a customer-centric bank. We will continue to do that, even more so in the post-COVID environment, because we do understand the hardships that are being faced by the businesses and the customers. And I would encourage people to talk to us. Come, sit with us, explain your business plans, explain your difficulties, and then we will jointly come up with solutions and plans to see you through that, see you through whatever the challenges that you're facing.
Thank you, Mr. Timal. I think Mr. Kulathunga Rajapaksa has a question. Mr. Rajapaksa, you can, yes. Rajapaksa?
Thank you, Mr. Muthumala. Now, the understanding is that SME sector, they will be banks are going to help SME sector for their business plans and various things. India, they have a scheme where to a certain limit they give loans to SME sector on collateral free based on the business development plans. Now in Sri Lanka, I have never heard of loans on collateral free loans limits. Is there any scheme in Sri Lanka where for the SME sector, based on the business plan, are there any loans that can be granted for collateral biggest in Sri Lanka?
If I may, I'll take that question. Mr. Rajapaksa, good morning. The last part of that question was lost, and sorry, if I may ask the others to go on mute, please, because we are picking up some disturbance.
My question here is, as SME sector is a vibrant sector, they should be helped, but only unfortunately, most of them, they do not have collateral facilities because they don't have access to give collateral. But their business plans are fairly solid business plans. But the only thing is, in India, they have a scheme where they have a limit, collateral free limit, not a big amount, but collateral free limit that they will allow. If the business plan is okay, loans are given without any collateral. Is there a scheme like that in Sri Lanka?
Yes, there is no formal scheme, Mr. Rajapaksa, but now if you look at, I can't speak for other banks, but our primary criteria when we evaluate a project, be it a SME or a corporate, is the viability of the project and the feasibility and the continuity and the sustainability of the business model. obviously the cash flow. So we structure our financing also in line with the cash flows, the expected cash flows. That's why we grant initial grace periods until projects are come off the ground and start generating cash flows. So there is no formal, but then if you look at our book, we have a lot of SME lending that we do without collateral. Based on personal guarantees and things like that. So collateral is not a must. Collateral is just a comfort for banks or for DFCC Bank. And that is essentially what I was telling earlier as well. We do look at the customer cash flows before anything else, or before looking at any collateral when we evaluate credit proposals from our customers. And although there is no formal scheme or a formal limit that we do collateral free lending, we do have a lot of facilities on our books that we have granted without collateral.
So thank you very much, Mr. Timal. Now, ladies and gentlemen, the time does not permit for us to go ahead. And anyway, I must thank again for the DFCC Bank for partnering with us to conduct this webinar today. And I must specially mention that DFCC Bank is, although it's a commercial bank now, they are always with the industries, and they are having very close connections with the industrial chamber, the Ceylon National Chamber of Industries. And I must also thankfully mention that the DFCC Bank, who has been with us as the principal sponsor and the official banking partner for our CNC Achiever Awards for several years now. In this year also, with the DFCC Bank with the principal sponsor and also the official banking partner for the Achiever Awards 2020. Now these days we are calling for applications. So Mr. Timal, Mr. Shamil and Mr. Wajira, thank you very much for your contribution, which is very helpful to the participants today, and also your clear explanations to the various issues. Thank you very much once again. So ladies and gentlemen, thank you very much for participating at this webinar today. So we'll hopefully we'll meet again with a similar webinar. Thank you very much and have a good day.
Thank you.
Thank you very much.
Thank you very much.